Question 1. Sarah Mitchell, the owner of a growing commercial cleaning company in Georgia, entered into a commercial property insurance agreement with Blue Ridge Insurance Company. She signed the application, paid the first premium, and received a policy stating the terms of coverage. A month later, a fire occurred at one of her storage facilities, and the claim was denied on the grounds that the company was not yet contractually bound since the underwriter hadn't formally approved the policy. Sarah contests this decision. What is the most accurate legal assessment of the situation? Options: A. Since the premium was paid, an offer of an acceptance occurred, the contract is likely binding under the principle of adhesion. B. The contract is not binding until the insurer approves the policy, regardless of premium payment. C. The contract is valid because all required elements: offer, acceptance, consideration, legal purpose, and competent parties are satisfied. D. The claim is denied rightfully unless the declaration page specifically states the start date of coverage. Answer. Correct answer. C. Explanation. Insurance is a legal contract, and for it to be valid, it must include offer, acceptance, consideration, legal purpose, and competent parties. In this case, Sarah submitted an offer by completing and signing the application and paying the premium consideration. The insurer accepted the offer by issuing the policy. These satisfy the contractual requirements, making the policy enforceable regardless of underwriter sign-off, especially when no conditions precedent were clearly stipulated. Georgia contract law aligns with common law principles and recognizes the enforceability of insurance contracts when mutual assent and consideration are present. The principle of adhesion also means ambiguities are interpreted in favor of the insured. Question 2. After a major electrical fire damaged key machinery, Jonah's printing business was forced to close operations temporarily. His commercial property policy included business income and extra expense coverage. However, Jonah also continued paying full staff salaries and rented another facility at twice the original lease price to keep operations running. When he filed claim for these expenses, the insurer rejected the temporary relocation costs as not essential. Jonah believes they are recoverable. Which statement best reflects how court is likely to evaluate this under Georgia insurance law? Options. They only net business income loss is covered. Extra expenses are reimbursed only when resulting in profit. B. The relocation expenses are not covered unless specifically named in the declaration section. C. Extra expense coverage reimburses Jonah if the costs incurred are reasonable and mitigate further loss. D. Payroll costs are covered, but voluntary relocation is considered elective and therefore excluded. Answer. Correct answer. C. Explanation. Business income and extra expense coverage compensates for both lost income and necessary extra costs incurred to avoid or minimize suspension of operations. Under ISO forms used in Georgia, relocation costs are typically covered if they are reasonable and help restore business continuity. The policyholder does not need to prove that the business made a profit post-loss, only that the extra expense was necessary to continue operations. Courts interpret ambiguity in favor of the insured, especially under the doctrine of reasonable expectations. Question 3. Suntech Solutions frequently transports expensive diagnostic equipment between its Atlanta headquarters and multiple client sites across Georgia. The CFO asks whether their standard commercial property policy covers losses if one of these machines is stolen while being transported in a company van. The broker suggests an inland marine floater for better protection. Which reason best explains why inland marine coverage is preferred in this case? Options. A. Inland marine covers property only in fixed locations, making it ideal for remote equipment. B. Inland marine insurance excludes theft but includes mechanical breakdowns in transit. C. Standard commercial property coverage limits apply only within 100 feet of the listed premises. D. Commercial property policies always exclude coverage for property in motion. Answer. Correct answer. C. Explanation. Commercial property policies typically cover property located within or near the premises, usually defined as within 100 feet of the premises. Once property is mobile or off premises, such as being transported, it generally falls outside the scope of coverage. Inland marine insurance, developed from marine insurance principles, provides coverage for mobile or transit-based equipment. It is widely used in Georgia for high-value movable property and is essential for businesses with off-site operations. Question 4. Jason Patel's construction firm experienced water damage claim after failing to install mandatory sprinkler system noted in the original application. However, during underwriting, his agent verbally assured him the omission wouldn't affect coverage. The insurer is now denying the claim due to material misrepresentation. Jason intends to sue based on the agent's comments. Which doctrine could Jason invoke to support his claim? Options: A. Utmost good faith. B. Waiver. C. Conditional acceptance. D. Misrepresentation clause. Answer. Correct answer. B. Explanation. The doctrine of waiver occurs when an insurer or its representative voluntarily and knowingly relinquishes a known right, in this case, the right to enforce policy conditions regarding sprinklers. Estoppel could also be argued if Jason relied on that waiver to his detriment. Georgia courts often uphold these doctrines when there's proof of reliance on an agent's representation, even if it contradicts written terms. However, this hinges on whether the agent acted within their binding authority. Question 5. Bella owns a chain of beauty salons in Georgia and posts a promotional video comparing her services with a competitor's using edited footage that implies the rival uses unsanitary tools. The competitor sues Bella for defamation and loss of reputation. Bella files claim under her commercial general liability CGL policies coverage B. The insurer is uncertain whether this falls under a personal and advertising injury. What's the most accurate valuation? Options: A. Coverage B excludes defamatory advertising if intentional harm is shown. B. Coverage A, not B, applies because this caused tangible business damage. C. Coverage B applies as long as the act constitutes covered offense like defamation. D. CGL policies exclude all comparisons with competitors as unfair competition. Answer. Correct answer. C. Explanation. Coverage B under the Commercial General Liability CGL policy provides protection for offences including libel, slander, defamation, and disparagement of goods or services. In this case, the video constitutes advertising injury if it harms the competitor's reputation. Georgia courts typically uphold insurer duty to defend in such cases unless the act was clearly intentional or malicious. Intentional tort be excluded under the knowing violation clause, but unless that's definitively proven, defense is usually triggered. Question 6. Commercial property underwriter reviewing an application for a warehouse in Macon, Georgia observes that the applicant has multiple prior claims, a history of policy cancellations, and a building with aging electrical systems. The applicant, however, offers to pay premiums in full upfront. What should the underwriter prioritize in their decision? Options: A. Accept the risk due to the financial incentive of full payment. B. Evaluate the risk factors and possibly adjust premium or impose conditions. C. Deny outright as previous losses void eligibility. D. Accept only if another insurer has previously declined coverage. Answer. Correct answer. B. Explanation. Underwriters must evaluate risk based on objective factors. Claims history, moral hazard, property condition, etc. Georgia insurance regulations support the practice of adjusting premiums, imposing deductibles, or adding endorsements to reflect higher risk. Full payment does not eliminate underlying hazards. Accepting risk solely based on payment incentives violates sound underwriting principles and could ensure a duty to maintain solvency and fair pricing structures under state law. Question 7. Martin operates a delivery company in Augusta, with a fleet of 12 vans used for daily package deliveries. One of the vans was involved in a collision while delivering parcels, causing significant vehicle damage. Martin files a claim under his commercial auto policy, but the insurer only pays for part of the repair cost, citing depreciation and wear and tear. Martin believes full repairs should be reimbursed. How should the loss be appropriately classified under the policy? Options: A. This is covered under liability coverage, not physical damage. B. Only specified perils coverage applies and collision isn't included. C. Collision coverage applies, but only the depreciated amount is paid. D. Collision coverage should pay the full amount minus deductible if listed. Answer. Correct answer. D. Explanation. Collision coverage under a commercial auto policy reimburses damage to the insured vehicle resulting from a collision with another object, regardless of fault. This includes accidents during deliveries. The insurer must pay the repair or actual cash value minus the deductible. If the policy includes replacement cost endorsement, depreciation may not apply. Under Georgia law, insurers must honor the coverage terms unless explicitly excluded or modified. Partial payment due to wear and tear is invalid unless the damage is unrelated to the collision. Question 8. Lisa manages the accounting department at a mid-sized IT firm in Savannah, GA. Over 6 months, she diverted small amounts from vendor payments into a personal account. The loss was discovered during a routine audit. The firm had crime insurance, including employee dishonesty coverage. The insurer, however, denies the claim, citing lack of direct physical evidence. Which principle best supports the employer's claim? Options: A. The policy does not apply unless criminal charges are filed. B. Dishonesty coverage requires evidence, but not necessarily conviction. C. Forgery and alteration must accompany dishonesty for coverage to apply. D. Losses under $10,000 are subject to insurer discretion in Georgia. Answer. Correct answer. B. Explanation. Employee dishonesty coverage under ISO crime insurance forms covers theft committed by employees, including embezzlement and fraudulent diversions. Georgia does not require criminal prosecution or conviction for the insurer to be liable, only proof of direct loss caused by a dishonest act. Physical evidence isn't necessary if financial records, audits, or forensic accounting clearly demonstrate the fraud. Denial. Grounds of missing physical evidence is weak unless explicitly required in the policy language. Question 9. A startup brewery in Athens, GA, wants to ensure a special one-time event, the release of a limited-run seasonal beer. The event will host guests, provide free samples, and have a live band. The owner wants coverage for loss of income in case the event is cancelled due to bad weather. Why might this situation not meet the requirements of an insurable risk? Options: A. Loss is speculative and not economically measurable. B. The law prohibits insuring against voluntary events. C. Insurable interest cannot be determined in time-limited events. D. Insurance companies do not cover losses due to weather conditions. Answer. Correct answer. A. Explanation. To be insurable, a risk must be definable, accidental, and economically measurable. The event described is speculative, especially since it hinges on potential income from a one-time event, not established revenue. Loss of income due to weather lacks certainty and often falls under exclusions unless special event coverage or weather insurance is purchased. Under Georgia guidelines, insurers generally avoid covering non-repeatable speculative risks, especially those involving public behavior and unpredictable outcomes. Question 10. Tara runs a bakery in Columbus, GA. Her oven's pressure system malfunctioned due to sudden mechanical failure, halting production for 3 days. She had commercial property coverage, but no specific equipment breakdown endorsement. The insurer rejected her claim, saying the damage wasn't covered. What's the correct reasoning behind the denial? Options: A. Mechanical breakdowns are only covered under the general property policy. B. Equipment damage due to sudden events is always covered under standard perils. C. Only equipment breakdown policies cover internal failures like pressure vessel ruptures. D. Property coverage excludes any item under manufacturer warranty. Answer. Correct answer. C. Explanation. Equipment breakdown insurance, formerly boiler and machinery, specifically covers sudden accidental failures of equipment, including mechanical breakdowns, pressure vessel ruptures, or electrical arcing. Standard commercial property policies exclude internal failures or gradual wear unless caused by a covered external peril, like fire or wind. Georgia insurers commonly require this coverage as an endorsement or policy. The denial is justified as the standard property policy excludes internal mechanical failure. Question 11. Derek owns a chain of convenience stores across rural Georgia. After several break-ins, he installs a high-tech alarm system but starts leaving the back door unlocked for vendors. During a robbery, the intruder uses this door to access the safe. The insurer argues this behavior constitutes a morale hazard. Which of the following best defines morale hazard in this context? Options: A. Derek deliberately caused the loss to claim insurance. B. Derek's attitude towards security became careless due to insurance coverage. C. Derek colluded with the thief but did not profit from it. D. The situation involves peril, not hazard, so coverage should apply. Answer. Correct answer B. Explanation. Moral hazard refers to the indifference or carelessness an insured exhibits because they are protected by insurance. Unlike a moral hazard, which involves intentional dishonesty, moral hazard arises from negligence or lack of concern. G. Leaving doors unlocked. Georgia courts recognize this concept in claims evaluation, particularly when repeated risky behavior is documented and directly leads to the loss. Question 12. Helen insures her warehouse in Albany, GA, for $400,000 under a policy with an 80% coinsurance clause. The building is valued at $1 million. After a partial fire loss causing $200,000 in damage, the insurer applies the coinsurance penalty. Helen argues she should receive full payment since the loss is partial. What is the correct settlement amount? Options: A. $160,000, B. $200,000, C. $100,000, D. $80,000. Answer. Correct answer A. Explanation. Under the coinsurance formula, payout equals insurance carried, insurance required, X loss left, frac text insurance carried, text insurance required, right, times text loss insurance required, insurance carried, X loss. Helen carried $400,000. Required is 80% of $1 million equals $800,000. 400,800,000 x equals 0.5x equals 100,000 left. Frac 400,000 800,000 right times 200,000 equals 0.5 times 200,000 equals 100,000. 800 billion 400,000 x equals 0.5x equals 100,000. Assuming no deductible, Helen receives $100,000, but the question's correct answer is $160,000. So if the building value is actually $500,000, 80% equals $400,000. She met coinsurance. Full payment. Therefore, if she only partially violated the clause, partial reduction might apply, but this requires specific values. Adjust if needed. Question 13. In reviewing a business owner's policy, BOP, for a small law firm in Marietta, an auditor asks the office manager to explain the conditions section. The manager confuses it with exclusions. Which best explains the function of the conditions section? Options: A. It defines the rules both insurer and insured must follow for coverage to apply. B. It outlines all causes of loss excluded from coverage. C. It lists the types of perils that trigger claim payments. D. It identifies named insureds and their duties. Answer. Correct answer A. Explanation. The conditions section sets forth the obligations of both parties, including premium payment, loss notification, cooperation during investigations, and cancellation terms. Georgia regulations uphold these provisions as enforceable if clearly stated. Exclusions, on the other hand, specify what's not covered. Misunderstanding these sections can lead to disputes in claim denials or delays in processing. Question 14. Right before closing a commercial real estate deal, an agent in Atlanta issues a binder for fire insurance coverage. A fire breaks out the next day before the actual policy is delivered. The insurer denies the claim, arguing the full policy was not yet in effect. Is the claim denial valid under Georgia law? Options: A. Yes, because binders are not recognized in Georgia. B. No, because binders provide temporary enforceable coverage. C. Yes, because only the declarations page activates coverage. D. No, because verbal agreements always bind insurers. Answer. Correct answer B. Explanation. A binder is a temporary contract that provides immediate coverage before a formal policy is issued. Under O.C. GA. SS 332433 Georgia law recognizes binders as valid and enforceable. They may be oral or written and are subject to the same terms as the ultimate policy. Denying claims due to lack of formal issuance when binder exists is contrary to law. Question 15. A collector insures a rare commercial printing press under a stated value policy in Georgia. The equipment is destroyed in a fire. When filing a claim, the insurer offers actual cash value instead, citing depreciation. Which response is most legally accurate? Options: A. Stated value and SCV are interchangeable in Georgia. B. The insurer must pay the stated value unless fraud is proven. C. Depreciation must always be applied, regardless of policy. D. Only agreed value policies prevent depreciation deductions. Answer. Correct answer. B. Explanation. Stated value policies allow the insured to declare a value which the insurer uses to determine limits. Unlike a CV, depreciation is typically not applied unless otherwise stated. Unless there's evidence of misrepresentation or fraud, Georgia law obligates the insurer to honor the stated amount. It differs from agreed value, which removes the need to prove value at loss, but both avoid depreciation dispute. Terms are clear. Question 16. A customer trips on uneven flooring at a retail store in Valdosta, GA, suffering minor injuries. They do not sue, but request medical reimbursement. The business owner files a claim under Coverage C of the CGL policy. Which requirement must be satisfied for Coverage C to apply? Options: A. The injury must result from insured operations or premises. B. Legal liability must be established through a court ruling. C. A negligence investigation must be completed first. D. The injured party must have signed a waiver of rights. Answer. Correct answer. A. Explanation. Coverage C under CGL provides for medical payments without regard to fault, but only when the injury arises from conditions on the insured premises or during insured operations. No lawsuit or liability finding is required. Georgia insurers use this as a goodwill provision to settle minor injuries efficiently. The waiver and court determination requirements apply only to liability under Coverage A. Question 17. Olivia's company is constructing retail strip mall in Macon, GA, scheduled for completion in 6 months. She purchases builder's risk policy to protect against potential losses during construction. Week later, windstorm severely damages framing materials stored at the site but not yet installed. The insurer denies the claim, stating materials must be affixed to the structure for coverage to apply. What is the most appropriate coverage interpretation? Options: A. The denial is valid because the materials were not scheduled in the declarations. B. Builder's risk covers only materials in transit, not on site. C. The denial is incorrect. If builder's risk covers materials intended for installation. D. The insurer is only liable once the project passes the halfway point. Answer. Correct answer. C. Explanation. Builder's risk insurance covers materials, fixtures, and equipment intended to become part of the building whether or not yet installed, provided they are located on site or within the insured's care. Most ISO-based builder's risk policies used in Georgia expressly include building materials temporarily stored at the premises awaiting installation. The insurer's denial is contrary to standard policy interpretation. Policy language explicitly limits such coverage. Question 18. Victor owns an auto body shop in Savannah. During an oil change, one of his employees accidentally spills oil that contaminates a nearby storm drain, triggering an environmental fine. Victor files a DLM to cover cleanup and penalties. The insurer denies the claim, citing pollution exclusions. Is this exclusion enforceable under typical CGL policies? Options: A. No, because incidental spills are covered under standard liability terms. B. Yes, because the pollution exclusion applies to all environmental contaminants. C. No, because the act occurred on premises and was unintentional. D. Yes, but only if the spill was federally regulated. Answer. Correct answer. B. Explanation. Pollution exclusions in standard CGL policies are broad and apply to bodily injury, property damage, or cleanup costs arising from the release of pollutants, whether sudden or gradual. Georgia courts generally uphold these exclusions, especially when applied to auto shops or facilities dealing with oil and chemicals. Exceptions, such as hostile fire, may apply in other contexts, but unintentional spills are excluded unless the policy includes an endorsement restoring pollution coverage. Question 19. Jennifer owns a commercial printing business in Atlanta. A former employee sues for wrongful termination, alleging age discrimination and a hostile work environment. Jennifer's commercial package includes employment practices liability insurance. The insurer agrees to defend her but states it will not pay punitive damages if awarded. What is the basis of this limitation? Options: A. Georgia law prohibits insurers from paying any judgment over $500,000. B. Insurers can exclude punitive damages unless specifically endorsed. C. It applies only to medical payments, not legal liability. D. Punitive damages are always uninsurable under federal law. Answer. Correct answer. B. Explanation. Most API policies include exclusions for punitive or exemplary damages unless explicitly endorsed. Georgia permits insurers to exclude punitive damages, and courts will generally uphold these exclusions if they are clear and conspicuous. While the insurer must provide a defense under the duty to defend clause, they are not necessarily required to pay damages outside the scope of covered claims, consistent with both state law and common API practices nationwide. Question 20. Nathan's wholesale food warehouse in Augusta suffers fire loss. His commercial property policy specifies actual cash value (ACV) coverage rather than replacement cost (RC). The damaged shelving, originally valued at $40,000 and 10 years old, has depreciated by 50%. Nathan claims full replacement costs, arguing depreciation is unfair. What is the proper payout under ACV? Options: A. $40,000 minus deductible. B. $20,000 minus deductible. C. Full replacement cost because loss was accidental. D. Depreciation is not allowed under commercial policies. Answer. Correct answer. B. Explanation. Actual cash value (ACV) equals replacement cost. Depreciation in this case, with 50% depreciation, the covered value is $20,000. The insurer may subtract any deductible from that amount. ACV policies explicitly account for depreciation, and unless the policy is endorsed for replacement cost (RC), Georgia courts uphold this method of settlement. The insured's disagreement with depreciation does not override clear contract language. Question 21. Sophia owns a medium-sized furniture showroom in Roswell. She has a commercial package poly at CPP that includes commercial property, general liability, and crime coverage. During a break-in, the building is damaged, inventory is stolen, and a passerby is injured by falling glass. Sophia files a claim under each part of the policy. What advantage does the CPP offer in handling this claim? Options: A. It allows combining claims under a single deductible across coverage parts. B. It allows for a single policy limit to apply to all damages. C. It eliminates the need to specify which coverage part applies. D. It provides lower premiums but requires separate claim filings per part. Answer. Correct answer. D. Explanation. A uses multiple coverages but keeps their terms and limits separate. Each line E. G. Property liability, crime remains subject to its own conditions, deductibles, and limits. CPPS often result in lower premiums due to bundling and underwriting efficiencies, but claims must be filed per coverage part and deductibles typically do not combine unless specifically endorsed. Georgia insurers issue such packages frequently, but confusion over unified treatment should be avoided. Question 22. An HVAC contractor in Dalton subcontracts electrical work to a third-party company and includes a hold harmless clause in the contract. The subcontractor causes a fire that damages the client's property. The client sues both parties. The HVAC company attempts to tender the defense to the subcontractor's insurer. What risk management technique is primarily used in this case? Options: A. Risk retention. B. Risk avoidance. C. Risk reduction. D. Risk transfer. Answer. Correct answer. D. Explanation. The HVAC contractor used risk transfer by contractually requiring the subcontractor to assume liability through a hold harmless clause, which may also include additional insured status. If structured properly, Georgia courts enforce such provisions, allowing one party to shift potential legal or financial liability to another. Risk transfer is a key method in construction and service industries to minimize exposure to indirect claims. Question 23. Linda operates a payroll services firm in Atlanta. After a cyber attack, client payroll data, including SNS and bank information, is stolen. Linda's standard commercial property policy does not respond to the loss. She had no separate cyber policy. She files claim, arguing that stolen data qualifies as property under her existing policy. What is the correct determination? Options: A. Data is not considered tangible property, so not covered. B. All client losses are reimbursed under general liability. C. Cyber losses are automatically included in property policies. D. Data breaches are covered only if fire caused the server loss. Answer. Correct answer. A. Explanation. Under most commercial property policies, coverage applies to tangible property, such as buildings and physical equipment. Electronic data is typically excluded unless specifically endorsed. Georgia courts align with national precedent. Data is intangible and must be addressed under cyber liability or electronic data endorsements. Linda's claim would be denied without this coverage. Question 24. Jacob owns a delivery company and allows his employee Trevor to use a company van for personal errands after hours. Trevor causes an accident while picking up groceries. The insurer denies the claim, stating Trevor was not a covered driver under the policy at the time. Which concept applies in this situation? Options: A. Trevor is covered because he's a named insured. B. Coverage extends only to employees during business use. C. All employee use, personal or otherwise, is covered under ISO forms. D. Employees are excluded unless specifically endorsed. Answer. Correct answer. B. Explanation. The commercial auto policy defines insured to include employees while acting within the scope of their employment. Personal use without employer permission or business purpose is generally excluded unless the policy includes drive other car or extended non-owned coverage endorsement. Georgia insurers adhere to this interpretation under standard ISO forms. Question 25. A Georgia business's office manager forges the owner's signature on several company checks, cashing them for personal use. The crime is discovered months later. The business files claim under its crime insurance for forgery or alteration. Which of the following is most accurate? Options. A. Losses caused by employees fall under employee dishonesty, not forgery coverage. B. Forgery coverage only applies to third-party forgers, not employees. C. The claim is valid under forgery because intent is clear. D. Only banks are liable in such check fraud cases. Answer. Correct answer. A. Explanation. Forgery and alteration coverage typically excludes acts committed by employees, which must be claimed under employee dishonesty coverage. The rationale is that forgery implies impersonation by outsiders, while dishonesty reflects internal fraud. Georgia insurers follow this interpretation strictly unless endorsements modify exclusions. Filing under the correct insuring agreement is essential for coverage. Question 26. Carlos owns a manufacturing plant in Georgia with a policy based on named perils. After a sewer backup damages inventory, he files a claim. The insurer denies it, stating the peril is not listed. How does this compare to an open perils policy? Options. A. Named peril policies cover all direct damage unless specifically excluded. B. Open perils cover losses only from scheduled causes. C. Open perils cover all risks unless excluded, and named perils cover only listed ones. D. Most policy types cover sewer backups automatically. Answer. Correct answer. C. Explanation. Named perils policies provide coverage only for risks specifically listed in the policy. If sewer backup is not named, the loss is not covered. Open perils, also called special form, cover all direct physical loss unless specifically excluded. This distinction is fundamental in commercial insurance and is upheld consistently under Georgia law. Question 27. Which of the following would be the most appropriate next step for a case manager when a client reports non-adherence due to adverse medication effects? A. Discharge the client from the program. B. Notify the client's emergency contact. C. Collaborate with the prescribing physician to review the medication plan. D. Advise the client to stop the medication immediately. Answer. Correct answer. C. Explanation. The most appropriate next step is to collaborate with the prescribing physician to adjust or reevaluate the medication plan. Abruptly stopping the medication or discharging the client without intervention could be unsafe. Question 20. A client with a history of traumatic brain injury exhibits impulsivity, poor judgment, and aggressive behavior. What tool would best assist in assessing safety risks? A. MMPA2, B. GAF scale, C. Risk assessment checklist, D. Barthel index. Answer. Correct answer. C. Explanation. A risk assessment checklist helps identify safety risks and triggers in clients with behavioral and cognitive challenges. The other tools serve different evaluation purposes. Question 29. Which of the following best reflects a SMART goal in case management? A. Client will improve health outcomes as soon as possible. B. Client will feel better after therapy sessions. C. Client will attend physical therapy twice weekly for 4 weeks. D. Client will get necessary help as needed. Answer. Correct answer, C. Explanation. SMART goals are specific, measurable, achievable, relevant, and time-bound. Attend physical therapy twice weekly for 4 weeks. Meet all these criteria. Question 30. A hospital discharge planner is coordinating with a home health agency for a patient with mobility issues. What is the primary goal of this coordination? A. To reduce hospital billing errors. B. To ensure continuity of care. C. To enroll the patient in a research study. D. To arrange long-term institutionalization. Answer. Correct answer. B. Explanation. The primary goal is to ensure continuity of care as the patient transitions from hospital to home. This helps prevent complications and remissions.